I've been a member of the Bar of the State of Maryland since 1954. I became interested in the subject of federal taxation when I was sent by a local law firm to Capitol Hill to cover House Ways and Means and Senate Finance Committee hearings in drafting the 1954 Internal Revenue Code. After some 17 years of government experience serving first as a clerk to a tax court judge and subsequently in the Office of Chief Counsel of Internal Revenue, I entered private practice in 1973. I have had an active practice which majored and emphasized federal tax cases representing taxpayers before the Internal Revenue Service and in the federal courts for approximately 28 years. I became very much interested in the last 2 years in the subject of Internal Revenue Service procedure matters. My concern has risen over such matters as violations of IRS regulations by the service, violations of statutory requirements by the IRS, disregard of their own master record system, manipulation of data on the IRS master record system, ignoring statutory requirements for making proper assessment of taxes, the ignoring of requirements for collection matters such as the enforcement of IRS liens, levies, and property seizures, and also a great deal of concern about a current trend toward abusive searches and seizures, which in my opinion so often violate the Fourth Amendment to the Constitution.
One of my problems with what they're doing is they're making these assessments on these people that I feel like are not honest and are unfair.
In one survey, something like 30% of the employees said they had seen examples of a taxpayer being treated unfairly. 30%. You know what that means? 30,000 cases.
I had to leave the IRS because I presented evidence that I had accumulated indicating that the agency was violating the law and violating people's rights. And I asked the agency for a response to my sincere concerns. And the answer I got was that they would not respond to my concerns and that they would provide me with the paperwork necessary to tender my resignation.
I really expected that, of course, there's a law that you can point to in the law book, the code, that requires you to file a tax return. Of course there is. Maybe I don't know what it is right then as he was speaking to me, but sure. So naively, I agreed to go off and research it and get back to him. 3.5 months later, I was at that point where I couldn't find the statute that clearly made a person liable, at least not me and most people I know. And I had no choice in my mind except to resign.
People might say, well, gee, if there wasn't an income tax, what would happen to education? They don't understand that education is paid for the most part, out of state and local taxes, your property tax. People might say, well, how are we going to build and maintain our highways? If there's no money coming into the government, we need our highways. There is a tax on every gallon of gasoline that people buy. Proceeds from the income tax do not pay for highway construction. The amount of money that we spend on defense is exactly equal to the amount of corporate income tax, which is quite legal and quite constitutional.
Americans just learned that the IRS was actually knowingly deceiving them, that would be enough for them to rise up and put a stop to it.
Do you pay an income tax?
Yes, I do.
You do?
Yeah.
Have you ever seen a law that requires you to pay an income tax?
Have I ever read it? You mean in the page, black and white? No,
Yeah.
no.
Have you ever seen a law that says you have to pay an income tax?
The law is that guy that wears that badge and a gun. That's the one that puts you in jail. That's the law.
They have a Rambo complex, the agents do, and They would come into the office, spend the entire day preparing to go out on the raid, and just like a bunch of children.
When somebody's been taught that something is a fact all their life, and you come to them with some new information that appears to be true, is credible, has foundation, they go through what's called cognitive dissonance, where their mind rejects that information because it means that they've been doing the wrong thing all their life. And it challenges them to the core. They actually become afraid.
Fear mostly is caused by a lack of knowledge. You can't move forward and make a decision when you feel like you don't understand something or you don't have complete information. So that's partly what I hope to contribute, is to help people understand the facts, understand the truth, know how they've been duped. Because even if they haven't yet, when they discover that they've been duped, even if they haven't taken any action to disobey these quote-unquote civil tax laws that we've been following for 87 years, if enough people finally realize the truth and are talking about it and demanding that the government answer for this injustice in the way that the laws have been administered, then something can happen and will happen.
If there was no law and I wasn't afraid of them coming and taking me to jail, absolutely I wouldn't pay taxes.
Okay, then no, I wouldn't pay income taxes.
It's a no-brainer. You wouldn't pay it.
I wouldn't pay it.
Why would anybody?
Because that's what they tell us we must do, else we're bad Americans.
Would you pay it?
No.
Would you pay it?
No.
Why would you pay taxes if you're an actor?
It would be a direct tax, and it is not apportioned as the Constitution demands.
If it's against the Constitution, then why are we doing it?
Is there a law that requires people to file a 1040?
Not explicitly, but it's certainly implied.
Well, implied by force.
Yeah.
But is there a law?
I can't cite a law, no. I cannot.
You can look through the statutes and look for the law that requires you to pay. And when you do that, you can't identify a law that requires the average person in America who earns a wage and works in private business to pay an income tax.
Hello, my name is Tom Cryer. I'm an attorney in Shreveport, Louisiana. I've been practicing here for over 34 years. And for years now, I have refused to file tax returns or to pay income taxes unless the government could show me any lawful authority for its demand that I do either one. As a result, I have been accused by the federal government of committing tax evasion and of committing willful failure to file a tax return. This is a story that you need to know about. This is a story about which you need to be aware, because it ended last week in my acquittal, a total, unanimous, not guilty verdict by 12 jurors in federal court here in Shreveport, Louisiana. In fact, you will not see this story on any of the mainstream media. ABC, CBS, CNN, even Fox News isn't going to cover this story. So the only way that we're going to get this news is through this video, which is why it's important that you forward this video or its URL to as many people as you can, because people need to know the truth that jury found out about last week. And that truth is that, first, there is no law that makes the average American citizen liable for the income tax. Second, that what is income is only the profit that is generated from some taxable activity. Third, that your earnings and wages cannot be separated into principal and profit or capital and profit, and therefore are not income as defined by the Supreme Court. And fourth, that your fundamental God-given right to earn a living through any lawful occupation, which has been recognized as being just as fundamental and just as basic and just as constitutionally protected as your freedom of speech and your freedom of religion, is not a taxable activity that is exempt from taxation by Congress or any other entity. And therefore, even if you took the statutes that say first exclude exempt income, and you exempted everything that resulted from your exercising your fundamental right to earn a living through any lawful occupation, then you will find that you probably have a near zero gross income. Are you going to be required to file a return if you have no gross income? According to the law, not according to me? Probably not. But you're still filing the things and they're still taking your money. You need to know your rights. You need to know the truth. You need to know what the government's rights and authority is in connection with your personal earnings. Go to truthattack.org. Learn the truth. Go to liefreezone.com. Learn the truth. And once you know that truth, take that truth to the rest of the country. Take it to your friends, your neighbors, your countrymen, because they are being victimized as well.
It's actually very simple. Congress tried to enact an income tax in 1894. The Supreme Court said that's unconstitutional. When the Supreme Court says something is unconstitutional, it's unconstitutional. They tried again in 1913, and the Supreme Court said the 16th Amendment conferred no new power of taxation. So, if they didn't have it then, and they didn't get it, they don't have it. There is no constitutional basis for a tax on the wages of Americans living and working in the 50 states of the Union. Period. End of argument.
The way that you find that is by, of course, going to the Constitution and examining the power of Congress to make laws with respect to income. You're not going to find any power over private income. The Congress has no power to impose an income tax, say, on a dentist in Grand Rapids. Even a dentist who employs a receptionist and a dental hygienist and a janitor, because there's just no federal connection. There's no authority there.
If I look to see where does it say that the revenue officer position exists and where's my authority for doing the things that I did, it's not there.
As an accountant, I trained as a CPA back in the 60s. I had a thriving tax practice after the CPA field. I processed thousands, if not millions, of paychecks for people, dutifully deducting taxes from them. Had a good time destroying other people's lives, I found out. The words of the Secretary of the Treasury, published as required, everything that applies to us. And in that words, it says that if, in effect, and I'm paraphrasing now, if you are an American citizen and you work for an American company and you live in the United States, your remuneration is not taxable. I'm not revealing anything new. There's people in this room who studied this and discovered it 10 to 15 years ago. I mean, I haven't went back through everybody that has been involved in it, but I'm not talking about anything new. I discovered it on the net. I was reading an article that talked about how an employee could do this, how the employee could refute the employer. And I sat upright in bed one night, my gosh, if the employee can refute the employer, why can't the employer simply do it right in the first place?
Citizens are required to make sure that the government is operating. And the way you do that is by questioning all authority. If that continues, then we really can't have freedom, because freedom only exists for those people who are strong enough to exercise it. And if you don't have the gumption to contest the authority of anybody who presents themselves as being part of the government, then we're all going to lose our freedom.
The employers in this country hopefully will start learning just how important they are in the process of stopping IRS from illegally taking people's paycheck by the notice of levy. You see, the only way that that can happen is if the employer agrees when they receive the notice of levy to send the funds from the person's paycheck to the IRS. I think it's quite clear that judicially speaking, in terms of due process in this land, they need a court order to do that. So the way that it happens is employers are afraid. They get threatened with a penalty for not turning over those funds to the IRS in response to a notice of levy. So they do it. If employers would take the time to learn that the withholding agreement between the employee and the employer is a voluntary thing, and understand that they are not going to be held liable and get in trouble if they don't force their employees to be withheld, then this thing can start getting turned around, and people can start having fear go away and dissipate, knowing the law.
John, let me begin with you. You used to work for the IRS. What makes you say that most Americans don't have to pay income taxes?
Well, the sheer solidness of the evidence. I did about 2 years of investigation part-time while I was a special agent for the IRS, and really couldn't help but conclude that the evidence showed that most Americans weren't required to pay it, at least not according to the laws passed by Congress.
I didn't believe it. I didn't buy it, and I spent the next 2 years trying to prove that it wasn't true. Instead, I learned that it absolutely was true. You've been taken for years when there is absolutely not one single law that says that you are liable for income taxes. There's not one single law that establishes a tax rate on you. There is not one single law or even regulation given the force of law that establishes what a standard exemption is with respect to you. Now, I can't blame you for being skeptical about this. I was more than skeptical. I thought that my friend who told me this had gone nuts. But it's a fact. It's the truth. And after 2 years of research and digging and trying to find a way to prove it to be false, all I could do was come to the conclusion that yes, it is true. You are submitting yourself to taxes to which you are not liable. Ask your accountant, ask your attorney to dig up the law that says that you are liable for the income tax, and ask him to show it to you. Thousands have asked the federal government to show them the law. And the federal government, the Internal Revenue Service, the Department of Treasury, the Office of the President, none of them have been able to respond with any single statute or any single regulation that makes the average American liable for an income tax. Congress and the law doesn't say you owe the tax. The Internal Revenue Service says that you owe the tax in a publication called the Instructions to Your 1040 Form. Those instructions are nothing but instructions. They are no more law than Time Magazine or Mad Magazine or the New York Times. The fact that there is no law is made just as plain as it can be by Aaron Russo's documentary film. Aaron Russo, the award-winning filmmaker, has produced a documentary that establishes that the government absolutely refuses to respond to any question concerning on what authority do you make the man on the street pay an income tax on his wages, on his weekly pay, on his monthly salary, on his personal earnings that he earns with his own labor and his own industry. We don't want you to put down in your gross income and on your tax return income that's exempt, or revenues and receipts that may not meet the constitutional definition of income. You did this to yourself, and you keep on doing it, and you keep on doing it, and you keep on doing it, and our fathers and grandfathers have kept on doing it. Well, it's time to know the truth. It's time for the truth to get out.
To have taxable income, we have to have gross income. And then we go to the term gross income, and it defines items of gross income that may be taxable. But it never says, throughout the entire subtitle, who's actually liable for this tax. It says this tax is imposed on the taxable income. It doesn't say it's imposed on the individual. It doesn't say it's imposed on the married individual. It doesn't say it's imposed on the American citizen. It says it's imposed on the taxable income. So who's liable to pay this tax? Well, when all is said and done, you find that Subtitle A just goes in this circular loop, this incestuous loop, if you will, of definitions, cross-definitions, and never really defines who is liable until you get to liability to withhold.
Well, I'll give you a legal answer. The government says those who are required to file a return are those that are liable. The sections that we have covered today, previously, you've read 6001, 6011, those are the general rules regarding the filing of returns. Those statutes use the word liable. And then if you engage in a search for who's liable for the income tax under Subtitle A, Sections 1 through whatever the end is, 1473, it varies from year to year. The only section that you will find in reference to someone liable, using the words of the government, are the withholding agents at 1461, withholding agents for non-resident aliens and foreign corporations. Those are the only ones that are specifically statutorily made liable.
Just like most people, I look at what the IRS provides to me and provides to millions of Americans, as we mentioned in the 1040 instruction booklet. And they are required by law, the Privacy Act and the Paperwork Reduction Act, to inform you of what the requirements are. And it specifically says to file a return for any tax you are liable for. So if the government is required to tell you what your requirements are, and they state it there, and then as we've said, the liability sections are so few, what else is somebody with some common sense to think?
Who is liable for the income tax? Maybe you, maybe not. Let's look at the law. The law on income tax is all contained in Title 26 of the United States Code. This law is law that must be strictly construed. By that, what is meant is that any act or any statute that's in derogation of rights or property must be construed literally. Nothing can be inferred, nothing can be implied, and nothing can be drawn from it as an indication of general intent. Either the law states clearly that you are liable or you're not liable. If the law does not state clearly that your income is taxed, it is not taxed. It must be clearly and plainly laid. And if the law can be interpreted more than one way, then that law must be interpreted against the tax collector and in favor of the citizen. So let's examine the law for a minute. The first law in the United States Code and the income tax law, which is Subtitle A of Title 26, is Section 701. It tells us that partners are liable for the income tax, but only in their separate or individual capacities. We don't know what liability they have yet in a separate individual capacity, so that doesn't tell us anything yet. The next law that we can find on liability deals with non-resident aliens and foreign corporations. There's a discussion in Section 884 that states that the foreign branch, corporation's branch tax, is to be paid for and is that the foreign corporation shall be liable. But that's not the income tax. Section 1461, any tax under this chapter is hereby made liable for such tax. Now we found somebody made liable. What chapter are we talking about? The chapter is Chapter 3 of Subtitle A, entitled Withholding of Tax on Non-Resident Aliens and Foreign Corporations. So if you are withholding taxes on a non-resident alien or a foreign corporation, then you are liable for the payment of that tax that you've withheld. Nowhere else in Subtitle A is there any provision making anyone liable for this income tax. There is, I finally find, in Section 3403, a provision concerning withholding of taxes under Subtitle C, which is employment taxes, not income taxes. But it says that the employer shall be liable for the payment of the tax required to be deducted and withheld under this chapter. And earlier, in 3401, it describes employees and wages. Let's assume, for the purpose of this discussion, that these are income taxes and that he's liable for income taxes. So if you are a person required to withhold taxes from a non-resident alien or a foreign corporation or from an employee as defined in Subtitle C, Employment Taxes, Chapter 24, then you might be liable. Have I included you yet? I haven't included me yet. Now, is this typical for tax laws? I don't think so. Every tax law always clearly states a subject. Every tax law always clearly states the person liable. I have 25 other federal taxes here. In each and every case of these taxes, they've all first defined exactly what the subject of the tax is, and second, they have defined precisely who is responsible for paying that tax. Only in the income tax law is there no or virtually no liability provisions, and there is no law making you liable unless you are one of the individuals I just listed out that does the law.
When IRS recognizes that a person hasn't filed the Form 1040, they, in order to follow their procedures correctly, they make this thing called a substitute for return, a dummy return. It has no income or tax information, tax liability information on it. It has entity information only, your name, your Social Security, your address. The agent also has, separately from the tax return, a folder, a file, some working papers, and he gathers in that other information that does have indications of money that you've earned by virtue of paper trail items, W-2s, 1099s, bank interest forms, different things that he has to have an awareness that you made some money. And so they make the presumption that therefore you have a tax liability.
They're not dealing with you as a private citizen. You are an individual with respect to the national government. You've done something. And that is, you've gone to work using a Social Security number. Somebody asked you for your Social Security number. You gave it. They have a federal identification number. They think they're a federal employer. They report your income as gross income. Gross income is what they tax. You are now a taxpayer.
And taxpayer has never won on that case.
If it looks like a duck and it quacks like a duck, and if it's got feathers and all that stuff, then it's the taxpayer.
Now, we've talked about who is taxed, and it may or may not be you. If you're an employer or you're withholding income taxes on foreign corporations or non-resident aliens, then you're liable. But what is taxed? The code says that it taxes taxable income. And at first glance, that appears to be under their definition of taxable income, which is gross income minus deductions. However, their definition of taxable income and their means of arriving at taxable income is a little more complicated than that. It tells us to look to the regulations, and in particular, it tells us to look to regulations such as Code of Federal Regulations, Section 861, which tells us how to calculate taxable income from sources of income from within and without the U.S. Now, what do we learn from these is shocking, nothing less than shocking. And that the first thing that we find out from these sections is that in addition to the deductions set out in the code that you and I are familiar with, that we also should deduct those items of income that cannot be included in gross income to start with. Now that tells us that there are items defined in the definition of gross income that cannot be included in gross income. Otherwise, there'd be no need to deduct them. It's one step farther. We go to 861.8, where it tells us to find a list of those things that can be included, and we find nothing that pertains to the average working stiff here in the United States. The items that they show are all foreign income, income from the territories, from Virgin Islands, from sources on merchant marine vessel contracts. If you're engaged in any of those, then perhaps your income is taxable. But if not, maybe it isn't. Now in 861.8T, we find another little shocking revelation, and that is that some income is actually exempt from income. Now, these are vestigial remnants of previous provisions that acknowledged openly that some income should not be included in gross income because it is exempt from taxation by the federal government. In other words, those items that cannot be taxed by the federal government under the Constitution. It also, in these previous versions of the code and the regulations, frankly admitted that some items of income are not income within the meaning of income as defined in the 16th Amendment and the Constitution. Income has been defined by the Supreme Court. The question here, though, on taxable income is that the government has indicated to us now that the only thing they're taxing is what is taxable. And they say these things are not taxable, such as exempt income and income that cannot be included in gross income. Yet they don't tell us what is exempt. It gives us 4 examples of what is not exempt, not what is exempt. And all 4 of those examples are examples of income that is not from the average typical American. 3 of those 4 are foreign sources, and the 4th is from the territories, any territory of the United States. But are you living in a territory? If you are, if you're earning money from a territory, then your income wouldn't be exempt. If you are not, then perhaps it is. The point that we have here is that the statutes and the code and the regulations promulgated do not establish that your income, very likely, if you're working for a living and earning wages, fails to demonstrate that your income is clearly and plainly within the scope of the income tax law.
You can hide your income, you can put it in the mattress, you can put it in foreign banks, you can do all that. If you have no obligation to pay a tax, then not paying the tax does not make you a tax dodger or a cheat or evasive or someone who is trying to defeat that tax. State government regulates occupations and professions so that the public will not be harmed by individuals who really are incompetent at those businesses, those professions, those activities. The purpose of the license is really to regulate, to identify these people and to make sure that they've had the training that's necessary in order for the public to be protected. Teachers are licensed, they're given credentials. That does not cause them to be liable for an income tax. You can be required to pay a fee for the licensing as an accountant or as a surveyor, as a broker or a real estate salesperson under a broker. If the license itself requires a tracking, record keeping of gross receipts or gross income or net income, then it's an income tax. There's a big push for a national retail sales tax to replace the income tax. But I hope that we will have learned enough about taxation to know that that's not possible, because the Congress doesn't have the power to legislate in that area. It can't create a national retail sales license.
We know that you, more than likely, are not among those made liable, and now we know that your income may or may not be included. But as we pointed out at the beginning, if your income is not expressly and clearly and plainly identified as taxed, then your income is not taxed. You cannot tax someone by inference or implication. It has to be clear and plain.
Some of the things that people do is to establish a paper trail that shows their good intent, not their bad faith, but their good faith, that they've read the law, they've got opinion letters from experts who have ruled on certain questions for them, and so they're demonstrating for the future purposes that they've made a good faith decision and conclusion that they're not a person that's liable.
So the next thing that you have to do is to find out, is your income within the constitutional power of the United States to tax? Is it exempt under the Constitution? Is your income really income within the meaning of the 16th Amendment and the United States Constitution? And I think that just as I was surprised to learn some things on this, that you will be surprised too. I was shocked to learn that the 16th Amendment did not authorize the income tax, as I'd always been taught. This isn't me telling you this. This is the Supreme Court telling us this time and time and time again. I was also surprised to find out that much of my earnings over my lifetime have been exempt from taxation because either they were outside the taxing authority or they were exempt because they were the result of my exercising a fundamental right, just like the right to free speech and the right to worship as I choose. Taxable income is a segment that we could spend an hour and a half on and not complete. But you know now that the statute does not clearly define taxable income, and it states that some income is not taxable and that some income is exempt. But it doesn't identify which income is not taxable under the Constitution. It does not tell you which income is exempt from taxation. And so it's up to you to dig it out and find out, because up until now, you've been filling out your forms, and the chances are that you've been filling out your forms to include non-taxable income. That just because you received money doesn't mean it was income within the meaning of the 16th Amendment and the Constitution.
The government wants to collect as much revenue as possible. And so they employ people to do that. They employ people that call themselves the Internal Revenue Service. They also employ attorneys. And they can instruct the attorneys, use the law to collect more revenue. But lawyers who are instructed to do this will do as lawyers do, and that's use the courts. And so they will go into court, and they will get their paperwork in order. They will take it to a grand jury, and they will tell the grand jury, this guy is not paying taxes. And you are. What are you going to do about that? Well, they're going to say, we are going to go after him. We are going to charge him with a crime. We are going to indict him. Now, we know that the law that they claim that he has broken is the law that requires the tax collector to pay the taxes into the Treasury. Okay? But they don't tell the grand jury that. So the grand jury thinks, as most people do, we have to pay taxes. Well, in a general sense, we do have to pay taxes, and really, we all pay taxes. But this is a wrong way to make a person pay a tax, because it's a tax he doesn't owe, and it's a punishment for a tax, for not paying a tax he doesn't owe. That's wrong, but that's how it's done. Your friends and neighbors do the legal lynching. That's what it is. And it just goes now to what is called the petit jury, the small jury, the 12-member jury. And they find that person guilty if they believe the government. But you don't have to believe the government. Okay? Because if you start asking those questions that jurors asked, then you'll acquit. You'll say, there is no law, there is no violation, there is no requirement to file, there is no tax to pay.
So who's to blame if you keep on putting income down that is not taxable, or income down that is not income, and paying taxes on it? Are you going to continue to do that? Or are you going to continue to educate yourself and find out what your rights are under the law? Not according to me. Not according to other people who say they know the law. I'm talking about the law according to the United States Supreme Court, according to the Constitution itself, and according to the statutes and the regulations that the government has written, not me. Everything that I have told you so far is exactly what they said, not what I said. And so be not fooled by these implications. Do not continue to be fooled by your own lack of understanding of your rights. This is an awful lot of your sweat, an awful lot of your toil represented that the government has been taking for years, for generations.
In a free country, the only way that people can be free is if the presumption that everyone knows the law operates. The only other presumption that can be made is that there's a tyrant who knows the law and will tell you what it is and will tell you what to do. You are obligated to know the law. But if you are obligated to know the law, then so is the man who claims to represent the Department of the Treasury or the IRS. They are presumed also to know the law and operate within the law. So if you ask that person for some proof of the government that they represent or the law that they are enforcing, then they have to give that to you. Or you can safely assume that they have no authority.
And they say, what do you mean you want to see our paperwork? We're IRS agents, and they showed me their badges. We're from Washington, D.C., and we've got to go take this business over here, and your chief says you're going to go help us. I said, and I will. I promise you I will if you'll show me your paperwork. And so they fished around and finally pulled out a crumpled up couple white sheets of paper and said, here's our seizure notices and everything. And I looked over and I said, hey, this is a little strange. I said, this is a little bit perplexing. I said, you're Harold and you're Jones. And I said, your names are at the bottom of these seizure notices. And they said, yeah, our name's at the bottom of it. We're here to seize this property for the United States government. I said, let me show you something. Let me show you something. I said, read right there, read right there. It's in the book. And they said, what's the book? I said, it's the U.S. Constitution. You would have thought that they just saw the cross. Because they shrunk back when I said it was the U.S. Constitution. Where did you get that? I said, out of my back pocket. Oh, is there power in this? And they said, well, we don't want to hear about the Constitution. I said, read that. And they read it. And it said that it would be signed by what? A magistrate, based on probable cause. Signed by a magistrate. And I said, who signed these papers? And they said, we signed them. Which one of you are the magistrates? No, there was not a magistrate among us.
The details and the actual authorities that tell you why that's drawn that way and what income and what people can be taxed by the federal government. You need to get this memorandum. Once you've done this, once you've studied this, once you realize what the truth is, then the question is going to be, what do we do about it? What can you do about the big lie that's been perpetrated and the big trick that's been played on the American worker? Odds are 9 out of 10 that your income has never been taxable. And when you read this memorandum, you'll be able to tell then whether your income is or is not taxable income and taxed by the income tax law. What you can do is to demand the truth from the government. Write your congressman, email your congressman. It's simple. You click on, you'll go on the net, and you can email your congressman, email your senator, and demand to be told exactly what law makes you liable for the income tax, exactly what law makes you have to pay over a part of your hard-earned wages and your hard-earned salary to the federal government every year. Demand to know the truth from them, and demand to insist on telling the truth to your neighbor. together, all of us demanding to know the truth, the lie will have to stop. The lie will have to quit. And why is this important? Because all of this excess revenue that the federal government was never intended by the founding fathers to have has allowed it to outgrow its intended role, to take over and to usurp issues and decisions that you and I are supposed to be able to make on a state-by-state basis. 56% of the federal budget is spent on regulatory agencies and government bureaucracies that the Constitution never authorized. Those funds should stay here with your state instead of the federal government handing money back to the states with strings attached, depriving you of the control of your own state legislatures by telling them that they will have to vote the federal way rather than your way. That's why this is important. You can do this. You can be a voice of truth. You can be a beacon of truth. You can demand that the big lie stops. Pull down this memo. Study. Find out how to get in touch with your congressman online. Write them hard mail. Do whatever it takes, but keep demanding to know the truth, because they cannot answer that question, and the reason they cannot answer that question is there is no law.
Hello, I'm Gordon Phillips. You know, the truth is a funny thing. You can distort it, you can even suppress it for a while. Sometimes you discover that it's hiding in plain view all along. But eventually, the truth always comes out. The problem with the truth is that once you learn it, you can't unlearn it. To understand how the income tax is applied, we need to look at the legal authority of the IRS to tax U.S. citizens living and working within the 50 states. Keep in mind that the Constitution protects the rights of these citizens. Therefore, the Internal Revenue Code must be written in such a way as to remain constitutional. All United States laws written by Congress are codified into 50 titles of law, each covering a different category of laws relating to education, the military, banking, and so forth. These 50 titles encompass what is known as the United States Code, abbreviated as USC, and can be read by the public at any law library. Title 26 comprises the entire Internal Revenue Code. Many tax professionals and even tax attorneys mistakenly view the Internal Revenue Code as a series of code sections that run from beginning to end much like a telephone directory. That is totally inaccurate. The Internal Revenue Code is not applied generally, and one cannot comprehend the code without first having a clear understanding of its structure and subdivision. The code currently consists of 100 chapters comprising 9,806 code sections compartmentalized as of this year into 11 subtitles. The first 5 subtitles, A through E, each cover distinctly different categories of tax. Subtitle A is the income tax. Subtitle B is estate and gift taxes. Subtitle C, the employment tax. Subtitle D is miscellaneous excise taxes. Subtitle E is alcohol, tobacco, and certain other excise taxes. Subtitle F is procedure and administration, which includes the definitions of various legal terms as used within the code. Subtitles G through K cover miscellaneous topics such as the financing of presidential election campaigns, etc. Each subtitle is a totally distinct and separate body of law unto itself. The application of each subtitle is found to be confined within its respective chapters, meaning that the liability and enforcement provisions confined within one subtitle do not extend to the enforcement of law in some other subtitle. Under the law, for one to become liable for the payment of any given tax, one must first be made legally subject to that tax. In other words, the tax must first be imposed by Congress, and the liability for the tax must arise from a specific written statute as expressed by the intent of the legislature. So if, for example, you're involved in the manufacture of alcohol, you become the subject of the excise tax on the privilege of being associated with that activity, and are thereby made liable for the payment of the alcohol tax. The same is true with regards to the manufacture of tobacco products. Perhaps you've seen the excise tax stamps on a package of cigarettes or on a bottle of liquor. However, if you are not involved in either of the activities, you are not liable for the payment of the tax associated with them. Just imagine if you were to receive a letter from the IRS claiming that you failed to file a return to report the number of bottles of whiskey you had just manufactured and demanding payment from you of $20,000 in unpaid alcohol excise tax. Would you immediately begin arguing the amount of the bill? Wouldn't you instead protest that they were writing to the wrong person and that you had never been involved in that activity and therefore could not possibly owe a penny of alcohol tax, let alone what the IRS claimed you owed? Well, what about income taxes? What about employment taxes? If you're like most Americans, you've probably always assumed that you had a liability to pay those taxes. But then you also assumed that you lived in a democracy. And you've also assumed that the government, not a private banking cartel, controls the supply of money in circulation. The only code section in all of Subtitle A that makes anyone liable to pay a tax on income is Code Section 1461, which states, "Every person required to deduct and withhold any tax under this chapter is hereby made liable for such tax." Well, who is this any person that Congress made liable to deduct and withhold? Code Section 7701A16 defines this person as the withholding agent, who is required to deduct and withhold any tax under the provisions of Sections 1441, 1442, and 1443. So we look up those code sections, and we see that Code Section 1441 applies to non-resident aliens, Code Section 1442 applies to foreign corporations, and Code Section 1443 applies to certain foreign tax-exempt organizations. It's important to understand that while the withholding agent may be required to file a return on behalf of his non-resident alien principal, he's not required to file a return to report his own income earned within the 50 states. The astonishing truth is that Subtitle A imposes the liability for the payment of income taxes on the income of foreigners and certain U.S. citizens working in a foreign country under a current tax treaty with the United States and earning over the $70,000 annual exclusion. There is no code section in all of Subtitle A, or anywhere else in the entire Internal Revenue Code for that matter, that makes the United States citizen earning his or her living exclusively within the 50 states of the Union liable for the tax that is imposed on income under Subtitle A. Period. With today's computers that can hold the entire Internal Revenue Code on a single CD-ROM, it's a very simple matter to search in a matter of seconds for any and all occurrences of such words as citizen and income throughout the entire Internal Revenue Code, let alone just in Subtitle A. And sure enough, the code section imposing a liability on a U.S. citizen for the tax on income when working within the 50 states of the Union is just not there. As further proof, the index for the Internal Revenue Code has no listing for the liability of citizens unless that income is from the insular island possessions. So why is the income tax so limited in its application? Why is the income of citizens living and working within the 50 states not subject to the income tax? Well, under the Constitution, Congress can impose two, and only two, different classes of taxes: direct taxes and indirect taxes. Article 1, Section 2, Clause 3 of the Constitution states,
"Representatives and direct taxes shall be apportioned among the several states."
Article 1, Section 9, Clause 4 states,
"No capitation or other direct tax shall be laid unless in proportion to the census or enumeration hereinbefore directed to be taken."
Americans are a highly mobile society, so some states could lose population over time while other states gained it. That's why there's a national census every 10 years to count noses, to determine both the number of representatives to be elected from each state and the proportionate share of each state's direct tax burden should Congress decide to impose a direct tax. Under direct taxation, Congress cannot directly tax a U.S. citizen. Direct taxes must be imposed according to census and enumeration upon the states of the Union only, to be collected within their respective borders from their own state citizens according to the limitations imposed by their own state constitutions. There are currently 435 representatives in the House of Representatives. If, for example, Congress decided to pass a direct tax to raise, say, $435 million, the governor of a state with 10 representatives would receive a bill from Congress for 10 435ths of that $435 million, or $10 million. The only other type of tax Congress can impose is an indirect tax, which under Article 1, Section 8, Clause 1 of the Constitution states,
"The Congress shall have power to lay and collect taxes, duties, imposts, and excises. But all duties, imposts, and excises shall be uniform throughout the United States."
Two examples of constitutionally uniform excise taxes are the federal excise tax you pay on each gallon of gasoline you pump and on each long-distance telephone call you make, regardless of which of the 50 states you're in. Keep in mind that all indirect taxes are avoidable in nature. If you don't want to pay the tax, don't participate in the activity associated with the tax. For example, to avoid the federal excise tax on gasoline, don't pump gas. Ride a bike instead. To avoid the federal excise tax on long-distance telephone service, write a letter. Direct taxes, however, are not avoidable. Now let's try to determine the nature of the taxes you've been paying each April 15th to the IRS. Are they direct or indirect? Keep in mind that an income tax is not a tax on you as a person. It's a tax on income. Income is inanimate. It cannot reach into its own pocket to pay the tax on itself. Someone has to be made liable for its payment. The question is, who is made liable? Well, we've already seen who's made liable, the withholding agent. And who is he required to withhold from? Those whose income is subject to the tax. And who is that? Foreigners. And why is that? Because the property of foreigners is not protected by the Constitution. The Supreme Court ruled in the 1920 case Eisner v. Macomber that income
may be defined as the gain derived from capital, from labor, or from both combined.
In the case Stapler v. U.S., the High Court ruled that income is not a wage or compensation for any type of labor. In Doyle v. Mitchell Brothers, the High Court ruled,
"Whatever difficulty there may be about a precise and scientific definition of income, it imports something entirely distinct from principal or capital, either as a subject of taxation or as a measure of the tax, conveying rather the idea of gain or increase arising from corporate activities. We must reject the broad contention that all receipts, everything that comes in, are income."
In Connor v. the United States, the High Court ruled,
"If there is no gain, there is no income. Congress has taxed income, not compensation."
In 1894, Congress tried to get away with imposing a direct tax on the property of U.S. citizens by passing the Income Tax Act of 1894. On May 20, 1895, in their decision in Pollock v. Farmers Loan and Trust Company, the Supreme Court rejected this tax since it violated the constitutional requirement of apportionment among the states. To quote the High Court in Pollock,
"The Constitution prohibits any direct tax unless in proportion to numbers as ascertained by the census, and prohibits Congress from laying a direct tax on the revenue from property of the citizen without regard to state lines. We are of the opinion that taxes on personal property being a direct tax, the income of personal property are likewise direct taxes."
Those same Jekyll Island insiders passed both the 16th Amendment and the Income Tax Act of 1913 in that same year to lay the groundwork for the imposition of income tax, which, as we've seen, never did have anything to do with the raising of revenue and has technically never been applied against the income of U.S. citizens working within the 50 states. The income tax inevitably was collected to guarantee the international bankers the interest on the national debt that would inevitably result after the passage of the Federal Reserve Act in December of that same year. The 16th Amendment, which became part of the Constitution on February 25, 1913, is the so-called Income Tax Amendment, which states,
The Congress shall have power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states, and without regard to any census or enumeration.
To this very day, a nationwide chorus of politicians, TV economists, and law school professors alike all chime in unison that the 16th Amendment authorized the imposition of an income tax on ordinary U.S. citizens. And they are all mistaken. The 16th Amendment did not amend or change the U.S. Constitution. But please don't just take my word for it. The Supreme Court itself in January 1916 ruled in Brushaber versus Union Pacific Railroad.
The proposition and the contentions under the 16th Amendment would cause one provision of the Constitution to destroy another. That is, they would result in bringing the provisions of the amendment exempting a direct tax from apportionment into irreconcilable conflict with the general requirement that all direct taxes be apportioned. The result, instead of simplifying the situation and making clear the limitations of the taxing power, which obviously the amendment must have intended to accomplish, would create radical and destructive changes in our constitutional system and multiply confusion. The 16th Amendment, as correctly interpreted, is limited to indirect taxes, and for that reason is constitutional.
In the case Stanton versus Baltic Mining, also decided in 1916, the High Court stated that the 16th Amendment conferred, and I quote, no new power of taxation. Imagine that. The highest court in the land stating, in plain English, for everyone to read, including the IRS, that the 16th Amendment conferred no new power of taxation. So the so-called income tax amendment that everybody and their uncle believes authorized the income tax, and that many patriotic Americans still object to since there is overwhelming evidence that it was never properly ratified by the states, changed absolutely nothing. The 16th Amendment was constitutional window dressing and might as well have never been written. The fact that the 16th Amendment did not change one word or phrase in the Constitution has for years been one of the U.S. government's best-kept secrets. Many college professors in our nation's most prestigious institutions still teach that the income tax is neither a direct nor an indirect tax, but is a hybrid tax that falls somewhere between the two. Such a gross lack of understanding by those charged with teaching the law to future lawyers is, in my opinion, unpardonable. Thwarted by both the Brushaber and Stanton decisions, the Department of the Treasury issued Treasury Decision Number 2313 on March 21, 1916. Here are a few excerpted quotes from TD 2313 in reference to the Brushaber decision.
It is hereby held that income accruing to non-resident aliens in the form of interest and dividends is subject to the income tax imposed by the Act of October 3, 1913. The responsible heads, agents, or representatives of non-resident aliens shall make a full and complete return of the income therefrom on Form 1040.
The Treasury Department has stated that you are to file Form 1040 on behalf of your non-resident alien principal. So don't forget to do that next April 15th. We have to ask ourselves a question at this point. Do we see a pattern developing here? Is it possible that this information has been deliberately withheld from the general public? And if so, why? Now you can begin to understand what your lifetime of voluntary compliance really means and how important it is to the IRS. Remember Section 1111.1 of the Internal Revenue Manual, which we showed you earlier? The mission of the service is to encourage and achieve the highest possible degree of voluntary compliance with the tax laws. If what we've said is true, then one would expect employers to be told somewhere that they are not required to withhold from U.S. citizen employees. Keep in mind that the only requirement for withholding is from foreign or non-resident alien type individuals. And indeed, if we read IRS Publication 515, we find a statement the IRS hopes you never see. Under the main heading, Withholding Exemptions and Reductions, and within the paragraph titled Evidence of Residence, the IRS states the following in speaking to the payer of income.
If an individual gives you a written statement stating that he or she is a citizen or resident of the United States and you do not know otherwise, you do not have to withhold tax.
And what is the statement of citizenship? It's simply an affidavit notarized and signed under penalties of perjury stating that I, John Doe, am a citizen of the United States. It's just that simple. So the bottom line is that according to the IRS, if you are a citizen or resident of the United States, the payer of your income does not have to withhold tax. Imagine that. Now ask yourself this question. If a United States citizen ever really were liable for tax withholding, why would the IRS ever have printed this statement anywhere? Why would it even exist in writing? 26 Code of Federal Regulations 1.1441-5, paragraph C states,
the duplicate copy of each statement and form filed pursuant to this section shall be forwarded with a letter of transmittal to Internal Revenue Service Center, Philadelphia, Pennsylvania 19255. The original statement shall be retained by the withholding agent.
If the citizen within the states of the Union stops filing Form 1040, the IRS will occasionally start a criminal investigation. With what you have learned so far, you can understand that the IRS computer would not recognize the validity of a criminal investigation against a citizen working exclusively within the 50 states. In fact, the IRS Internal Revenue Manual, Chapter 1100, titled Organization and Staffing, states in Section 1132.75,
the Criminal Investigation Division enforces the criminal statute applicable to income, estate, gift, employment, and excise tax laws involving United States citizens residing in foreign countries and non-resident aliens subject to federal income tax filing requirements.
There's no mention of the U.S. citizen residing within the 50 states, is there? Why? Because the income of citizens living and working within the 50 states is not the subject of the tax. Now you have to make a decision. Are you going to be a part of the problem or a part of the solution? So what is the solution to everything you've just learned? Is it to stop filing returns, as the IRS itself has recently admitted is now reaching near epidemic proportion? Well, if the law does not require you to file, and you know that for a fact, then there's no reason to file. However, the only one who can make that determination is you. And you can't base that determination on the superficial information you've been exposed to on this tape. The purpose of this introductory tape is merely to break some of the rust free on our mental gears, to get us to think for ourselves. We need to educate ourselves. Remember what the Supreme Court said in U.S. v. Minker?
Because of what appears to be a lawful command on the surface, many citizens, because of their respect for what appears to be law, are cunningly coerced into waiving their rights due to ignorance.
Your neighbor is fighting for his freedom and may not be expert at it, as I am or my clients are. But with a little bit of assistance from his friends and neighbors, he could stay out of trouble, because he's not getting into trouble because he's breaking the law. He's getting into trouble because you are turning your back on him, and you're turning your back on the history of this country. You're turning your back on the history of taxation. You're turning your back on freedom. You're turning your back on everything that this country was founded on, because you think it's going to be more comfortable to listen to what somebody tells you is the law rather than you figuring it out for yourself.